Okay, you can ask a question. Bro, you can ask a question, or should I start? I want to start the class. Ask a question if I start. Follow the setup that goes with the higher time frame. Yeah, that's just what you should do. Because on um on the higher time frame, gold is bullish, but you might be on the smaller time frame and you might see some, bearish setup. So why should you be selling the follow the higher time frame? Or if you have a higher time frame liquidity point and that higher time frame liquidity point isn't taken out yet, then you are seeing buy setups on the lower time frame. So why should you take those buy setups? You should wait till the higher time frame liquidity point is out before you look for buys. So that's it. All right. Let me quickly give you guys a rundown of this trade before I can start teaching about trend lines because that's what I want to do today. So let's go to the 4 hour time frame. The best way to take entry if you miss your initial entry is to wait for the setup to form again. Wait for the setup to form again. If the setup forms again, then you can take another entry. If it doesn't form again, then you just let it go. You just have to let the trade go. And then that one is going to be a miss. You just have to let it go. But if it forms again, yeah, you could take another entry if you see another setup. But if price was just moving high, going too fast, and didn't form the setup again, then you have to let it go. That's trading for you. Sometimes you miss, sometimes you make it. That's trading for you. So now let's look at the 4 hour time frame. On the 4 hour time frame, I was explaining to you guys previously that we're having price doing this, right? Price has been giving us what I explained to you guys from the weekly trend and all. And now the 4 hour is starting to go bullish, right? We had this trend. So price pulled back inside here to make a higher low. This low is higher than this low, right? So now the goal is for price to make a higher high, go above this high, yeah, and make a high higher than this high. So that's the goal for price now. So if you know that this is your bias, you want to see price make a higher high. So what you want to do is one buy all the way up till price make that higher high, right? So all you're going to do now on the 4 hour time frame, you can only see bullish candles, no structure being printed, right? So what you do is on the lower time frame, right? You go to lower time frame, the 5 minutes, the 15 minute, the micro time frames now, you use their structure to get in. You will use their structure to ride in, targeting what the 4 hour high to make a higher high. That's how you do it. You use the lower time frame, the microstructure, to ride and follow the macro structure. So now, for I explained all these other entries from last week to you guys. So from today, how did I take this buy today? Today I could just look at the chart and I could see that price was bullish, like very bullish. Price was very bullish. So it was giving me lots of bullishness and price needed to make or to go higher and make higher highs. So all I did was look for my entry setup. Now, like I told you guys, we have three entry models we use to trade. Three entry models we use to trade. The first one is this. Price give you your structure point here, breaks it, right? You have your BOS right here. Then price pulls back inside, goes. Comes back, this low becomes your liquidity. And as we know, the level closest to your liquidity is your entry. So price take liquidity and what you buy. The second one is is one where price gives you pulls back inside. Price goes like it wants to go higher, but pulls back inside, creates a low, then goes higher and break structure. Now, when it comes back, this low that was created before the break of structure becomes your liquidity. Price takes it out and what? Goes higher. The third one is where price give you a break of structure, doesn't pull back, but then comes back like this, does something like this, come back and go. So these are the three entry models we use to take trades, right? These are the three ways we can take our trades, either of these ways. So you know this that we have these three entry models. So what I wanted to see was what look for three entry models for any of the entry models that could rhyme for me to take my trade. So what do I do? At first, I would go to the higher time frame and I checked on the 4 hour time frame, I think, yes. The 4 hour time frame, I looked at 4 hour supports and I could find 4 hour supports I could find, I think. Yeah, so here we have this 4 hour support on Rwanda. This is what I first saw. This 4 hour support on Rwanda, which we have right here. This 4 hour support on Rwanda, which we have right here. So when I saw this 4 hour support, I said, okay, so price might use this 4 hour support to fly, right? So back on forex.com, after seeing that 4 hour support on Rwanda, I have to look for a reason why that 4 hour support could be respected. Because the 4 hour support is also this 3 hour open close here. So on going to my 5 minute time frame, it was there, like it was just there. Price created a break of structure, and then I have my type 2 entry model with the entry point being the 3 hours support. This support is on the 3 hours as well as what the 1 hour, 30 minutes, 3 hours, all have this support, right? And also the 4 hour on one that also have this support. So it was clean. The entry model was there. Entry model was clean. Price give me what goes up, goes back inside, then break structure. Return my struct. This point becomes my liquidity. Price taps and up we go. So that's as easy as it can be. It's that easy. Price is that easy. So after seeing this, all that's left is just to what? Take buys and hold. That's all that's left for you to do on price. That's all that's left for you to do. But there's nothing complicated about the setup. The setup is clean. Everything there was, planned out and clean. So from what I'm seeing now on gold has given us 15 minutes shift in structure and it's pulling back. So we can have more opportunities to enter buys. So 15 minutes shift in structure, we're pulling back inside. So we might have an opportunity. I think 15 minutes shift in structure. This is our liquidity here. Small driver. Yeah, so we might be printing something for the buys. Because this is following like the model 2 entry again, right? But on the 15 minute, on this 15-minute time frame, it's just like a week. It's just a week, but it still follows the same principle. Because if you look at it right here, you can see that this was like, okay, let's see now. This was our break of, so our structure point, right? So price came here and then pulled back like this before breaking structure. So this becomes our liquidity and price has taken that out. So it's clean like that. So now the liquidity is out. We might see price go back and reverse to the upside, especially when we have this, especially since we have price tapped into the level from here, we might see price reverse now and go back to the upside. Price might reverse now. And it's New York session. So it's possible we reverse now and go to the upside from this zone. Reverse now from this zone and price just goes to the upside. But I'm very confident in this buy because price has to take out all of these liquidities that have been built up above here. So price has to go up. So I'm very confident in the buy. So I'm just going to wait, but I'm not going to take any other entry. I'll just leave my initial entry with break even and watch what price is going to do. And if I get hit out with break even, I'm done for today. Just going to watch what price is going to do. So this aside, we did not come for a live session to analyze charts. We came to, I'm here to teach the trend lines, right? Because that's the topic we are on to for today. So I'm here to teach trend lines. So for the trend lines, I use three types of trend lines, three main types of trend lines. And these three types of trend lines I use are the, and these three types of trend lines I use are the first one. Let's hide the charts. So first one, the three main types of trend line I use. The first one, we have the first one, reversal trend line. You have the reversal trend line. Now, this trend line is a kind of trend line that you use in spotting price reversing, right? Not really price reversing, right? You could use this for any kind of entries, but the name comes from the fact that for it to form, price has to be going in the opposite direction from what you want price to go, such as the bullish version. For you to buy, price has to be going down like this, create a low, a lower low, then the third one has to be your entry, and you mark from the body. So you mark like this from the body. Third touch is your entry. So the third touch can align with your SNR level. It could serve as extra confluence for your entry. So that's why they call it the reversal trend line, because you want to see price go in the opposite way from which the trend line formed. Trend line was forming with price making lower lows, and then you want to see price buy. That's why they call it the reversal trend line. And the bearish version, you want to see price going higher, but then go down. Price goes like this, you this, you this. So this would be your first point, a second point, and then on your third touch, you enter and you expect price to drop. So this is the reversal trend line, or what they call the divergence trend line, right? So this is what it is. Your reversal trend line or divergence trend line. That's the name for this trend line. So this kind of trend line, so this trend line is one of the best trend line for you to use, right? So, but trend lines are very subjective. Like you don't just use trend lines for analysis. You don't just analyze based on a trend line. You use trend line based on other factors, but trend line becomes a confluence. So if you have your break or structure, whatever, and everything aligns, and this becomes your POI entry point, right? You could use the trend line to give yourself extra confluence, because the trend line is also a kind of support and resistance. But that's something they call the dynamic support and resistance, because it's not on a straight line. It's kind of moving, right? So that's why they call the trend line a dynamic support and resistance. So the trend line is also a type of support and resistance. So it's more like saying that another support is on that area. So that's why a trend line is important, but your trade must not be built off the trend line. A trend line can just serve as an icing on the cake. Yeah, so it just make, I don't really mark trend line. I see them. Like when I make my trades, I can just look at a time frame and I can spot a trend line, but I don't mark them out because they sometimes make your chart look messy. So I don't mark the trend lines out. So that's my first type of trend line. I use three types of trend lines. So this is my first one. So the second one on my list is the continuation trend line. So continuation trend line. How do I spell this? Continuation. So continuation trend line. Unlike the reversal trend line where you want to see price buy, but price would come down and create you lower low before finally buying, right? And then you connect to the lower lows, or you connect the lower highs if the higher highs for if you want to see price sell. Unlike those ones, the continuation trend line is the kind of trend line where the continuation trend line is a kind of trend line where you want to see price creating higher lows. Like in an uptrend, you want to see price creating something like this. For you to buy, price has to be doing something like this. So this would be your first point, second point, and on your third point, you want to buy. So price is making what? Higher lows. So that's why you call the continuation a low. This low is higher than the previous low, then price taps and what? Buys. So for the downtrend, for the sales, it's the same thing. You want to see price what? Doing what? Making what? Lower highs, right? So price is going like this. So this like this. This is your first point, your second touch. So on your third touch, you want to see what price drop. And most times the continuation trend line is better if the low, like this place here, has a BOS. If there's a break of structure here, it's higher probability, or this one too, if there's a break of structure. Like with the body, price break the low. Like this move breaks this low with the body. It's very high probability. So if you have this kind of trend line aligning with your zone, yeah, it's very clean that that trade could work. High probability, like even if price doesn't reach your TP, there will be good reactions from there. So that's another confluence you could use, a continuation trend line. And remember, trend line are just for confluence and not a must. In some trades, you might not have a trend line, you might not see them in some trades. So that trend line confluence might not be present in some trades. You can see gold is reacting well from that level, gold is reacting well from there. So you might, in some trades, you might not see a good trend line confluence. In some trades, yes, you will. Some trades you won't. So it's very, very subjective. That's why you can't build a bias off of trend lines. But for your entries, you could use that for confluence and confirmation, right? For your entries, you could use that for confluence and confirmation. So gold is reacting from here. So this is like a second entry, but I'm not going to take a second entry. I'm just going to hold onto my first entry to my TP. Because when price take out this Asian high here, if price goes all the way up to this point, take out the Asian high, I'm going to book partials, and then I'll hold my trade till the 4-hour high is out. So now a 4-hour higher high is created. Remember what I said? The main goal is for price to reach a 4-hour higher high. So if price goes there, I will hold my trade till this point. Price makes 4-hour higher high. So let's see how it plays out. So I'm holding. Don't misunderstand the setup. Remember, price is bullish. So if you are not going with the higher time frame trend, right, you misunderstand. And in some cases, you end up saying that the strategy is not working and you are failing. But because you are just doing something else, don't go about saying break of structure and liquidity here. Your stop loss is going to get taken out because this is a setup that's conflicting the trend, right? It's on the opposite side, on the 15-minute, not like opposite side on the 4-hour, opposite side on the 15-minute, small time frame. You're going to get very much stopped out with all the liquidity built up above these areas. You are going to get very much stopped out if you try buying from them, try selling from them. So don't go against the trend, just stay with the trend. So if you stay with the trend, you can see that instead of you doing break of structure liquidity, you could see what shift in structure liquidity entry instead. So let's continue with the trend lines. So my third type of trend line I like to use is what I call the break and retest. Right? My break and retest. Yeah, break and retest. So this is the third type of trend line I like to use. And this type of trend line is simply a continuation trend line that gets broken, which means if you have a bullish continuation trend line like this, right? So like this. So you expect price to give you what? Your third touch here and buy. But instead of this, but instead of price giving you that, instead of price giving you a third touch and buy, price breaks the trend line. So when it happens like this same trend line, price would come back like this, ups and go down. So this is what they call a break and retest trend line. And the same thing is for the bearish side. So you have this like this. You expect price to give you what? A touch and sell, right? You expect price to give you a touch and sell, but price didn't give you a touch and sell. Instead of price to give you a touch and sell from there, price gave you what? Broke it. So when price broke it, you can expect that price to come back and buy. So if you have your zone sitting around this area, it's an extra confluence for you that, okay, you have your support level here and also a trend line around the same area as your zone. So that's so these are the kind of trend lines I use. We are going to go on the charts and mark some examples. Trend lines are not really hard. It's not that much of a deep topic. It's something you could master with just, I think, one explanation you could master everything. So it's not that much of a deep topic to master. But the thing is, if But the thing is, if you understand structure and liquidity, you could win in any market. If you understand structure and liquidity, and I gave you guys the three variations of my um, entry models and inducements, right? Because sometimes target liquidity might not be the problem. It's knowing which inducement, which liquidity is inducing your POI. The most common one is the first pullback after the break, right? But in some cases, price wouldn't use that. In some cases, price is printing a different setup. Yes, in some cases, there's a different setup. So if you didn't understand what's going on here, and for you to also know which setup is most likely going to be used, you should also, like on your own, check multiple time frames, see other support levels, and see which one even looks good. Because if you look at the support level on the 3 hour time frame, you could see that clean open close that aligns with the 1 hour open close as well. I mean, with the 1 hour V formation. And then you come on the 5 minute time frame and you can see this setup, this entry model too. And you need no one to tell you that this setup is what price is printing for today. So seeing this, you need no one to tell you what price is printing for today. So you guys should study the setups. So moving on to trend lines. Let me show you guys the trend line I used on today's entry, the entry we took today, right? Which trend line was used? I used the continuation entry, the continuation trend line, sorry. So this was what? Break of structure. Like I said before, for the continuation trend line, you have to, it works more if the second leg has a break of structure. So this one, my price is giving you something like this. Goes higher, okay. So break of structure should occur here. Then price come back. So if you have a zone, so if you have your zone that's around there and you get in with this trend line like this, third point is your entry. So let's say for example, this you have your entry at resistance break becomes support, and then trend line also aligns with resistance break becomes support. You can see how clean it is. So the reason for this entry was what my entry was from here. Entry was from this thing right here. And then mark from the body. So this was trend line I had used for this trade. A continuation trend line used for this trade. Mark from the body. This was what I saw. Right? So this is what I use for this trade. But I don't like marking the trend lines out on my chart. I just see them and I just know, okay, there's a trend line there. I don't really mark them. So it just serves as extra confluence to your trade. You don't build a bias out off of the trend line, but they can serve as extra confluence for the trade. Right? Any questions? Guys, any question? Any questions? Anybody with a question regarding this setup before I continue with the trend line? Any questions regarding this setup? Because I'm going to be moving to different charts to show you the trend lines, stuff like that. All right. I'm going to be moving through different charts to show you the trend. I hope everyone understands this entry and also the re-entry. The re-entry is quite simple. Shubham, or pardon me if I don't pronounce your name properly, but I saw you were being confused, but there's nothing to be confused about, right? This is the entry model 2. I sent you guys the PDF, the file of the three entry model. So you can see that this was a 15 minutes. We had a downtrend, like a high, a low, and yeah. So price broke here. Price broke with this body, right? But in this case, price is not giving this as the first pullback entry and whatever, right? Because price has more liquidities below. There was a liquidity that was there before price broke. So when price break out, this one becomes your inducement, and the level closest to it, right? Like right now on the 15-minute time frame, there is no level closest to it. Price didn't come close to these levels right here. But on the 15-minute time frame, if you look carefully, you could see that price is reacting off of the left shoulder. And that left shoulder, this one, if I put on the line chart, let's see. Of the left shoulder. Yeah. You can see this one, this left shoulder. Yeah. I remember when I taught you guys SNL levels, when we told you guys that price gives you a support, breaks it, it's supposed to become resistance, right? But price breaks it again, so it becomes support back. So that left shoulder there on the 15-minute time frame being used. At the same time, if you go to the 5 minutes, on that same level, on the 5 minute, that same level, you have an open close right there. Or on the 5 minutes, you could use this setup on the 5 minute and you have the model 1, right? You could use this setup on the 5 minute, double break of structure, and another break of structure, right? I explained this to you guys. Your price gave you 2 break of structures, very strong. So first pullback becomes your liquidity. You could use this on the 15-minute time frame. You have model 2. On the on the what do you call it, 5-minute time frame, you have what, model 1, 2. So just be flexible. Go, yeah. So you could use this on the 5-minute time frame, and you could still get the same entry, right? You could still get the same entry using both of them. You still get the same entry points using both of them. So right now, let's move on with the trend line. Let me show you guys a couple examples of trend lines before we move on to other things. So from here, right here, we have a continuation trend line here, because we have this, you have this resistance, right? This resistance level, right? You want extra confluence, you could use this one. Price gives you a first point, you mark from the body, right? Second point, mark from the body. Third point becomes your entry, aligning with what? Resistance at the same time. So you could use that for your entry for this cell, or the cell that moves down to this point. Can you see that? So this is a continuation trend line, bearish version, right? So let's go on to other forms of trend lines. Let me show you other types of trend lines before we let me look for it. Let me look at this one. Let's look at this one. Okay. So this is also another continuation trend line, because I remember this entry I took from here. I had a continuation trend line confluence. So this support here, I have trend line, first point, second point being here, third point is the entry, also aligning with what? So this is just an extra confluence for your zone. After you mark the liquidity structure, your zone, you can now use this, right, as an extra confluence for the zone, right? And then this one You're looking for a good reversal trend line. Okay, so this is a good reversal trend line example here. So you can see here, first point, second point, entry. So let's look at the line chart. Let's look at the line chart. So on the line chart, you could see what price was doing here. Price gave us what? This low, right? Followed by this low, followed by the next low here. Then, just like this, right? This low, this low. So the next touch on the trend line would be your entry, right? So this, let's look at the candles again. So you can see that the third touch on the trend line becomes the entry, right? So this is what reversal trend line. The reversal trend line, bullish version, right? For price to buy. So let me look for the reversal trend line on the bearish version. Okay. So we have reversal trend line bearish version right here. Say you have this as your zone for sell, right? You have this zone to sell. So you mark your reversal trend line like this. First point, second point, your entry. So we have what? Price going higher, or you could use this. Let's see if this is better. Yeah, this one is better. So you can see this. First point, second point, entry. Price was going higher, making higher highs, but for you, you wanted to see a drop. So that's why they call it a reversal trend line. That's where the name reversal trend line comes from. Hope that's clear. Then we have the break and retest trend line. I need to find you guys an example of that too, so you guys can see. So, okay, so this is a good example of a break and retest trend line. So from here, you have what like this. So price gave you what? A bearish continuation trend line like this. Right? Instead of price tapping and what selling again, price instead of that, instead of tapping and selling again, price doing this. When price came back to the trend line, buy, right? So that's another example of what bearish continuation trend line. I mean break and retest trend line, sorry. Break and retest trend line for the bullish version. And the bearish version of a break and retest trend line, let me look for that. Okay, I think I have an example here. Let's check this out. Okay, so this one didn't tap on the trend line, but let me just use this for the example I want to give you. Let me just use this for the example, even though it missed the trend line a bit. Right, so let's say you have your stuff like this. So this is your entry point. So like this is your first point. Bullish price is making higher high, right? So this is like a continuation trend line. Price does this. So you expect the third touch to fly. But instead the third touch breaks. When price comes back, you sell. So that's how the trend line works. Right. So we are going to do more examples of these trend lines in our next class. Examples of these trend lines and how I use them when I trade. How I use them when I find entries. So gold is moving nice from the second entry. Though I didn't take a second entry, but gold is moving nice from that. So if you are already in a sell with the illusion of this being your break of structure and then this being your liquidity, if you're already selling with break of structure or first pullback liquidity, if you're selling with this illusion, please get out of that sell. Don't sell because you're going to get stopped out. But if you insist you can hold on to it, who knows? You might be right while I'm wrong. Wrong. I don't own the market. So, but I'm just saying, from my point of view, gold is very bullish and this is not a good setup to take. So, let's see where the buy leads us to. Because for me, I'm waiting for all these liquidities here to get taken out. This is my major target. First safest target, this high. Plus it's the Asian highs. Let's see what price do around there. What price is going to do around there. Let's see. Any questions? Any question, guys? Okay, my TP is on 72 because of this high. All these highs here. I want to see them get taken out. So these are the major areas I'm targeting. Right, but this is the safest area to target. Asian high. So once price gets here, I'm going to take partials. Sniper setup. Bro, like I've given you the three types of entry setups I use, right? The first one, the second one, the third one, they're on the group. Like there's no sniper setup. Like I have some entries that aren't sniper. Like you see this one, it's not sniper. Like there's no rule for sniper setup. Some entries are going to be sniper, some won't be sniper, right? If I have my liquidity, if I have my trade like this, if I have my setup like this, price give me this break of structure here, pulls back, and then goes and this becomes my liquidity, and price come back on me, right? I'm going to have this as my zone of entry. I could enter here with a stop loss here, and price goes like this and buy. It didn't give me a sniper entry, but the setup played out. So that is the most important thing. So there's no need for sniper entry. This one just happened to be sniper. But if you watched, I kept my SL below this low. I kept my SL below this low to give room for in case price decides to make its way down to the 5 minutes support, because price could be crazy at times. In case price makes its way here, I kept my SL below this low. So it just happens to be sniper. It just happens to give me a sniper entry here. So I'm not a fan of sniper entries. I don't look for sniper entries. If they come, it comes. If sniper comes, it comes. But I'm not actively analyzing to make sniper entries. I just follow the setup. I follow what works, right? So I'm not looking for sniper entries. I'm just analyzing the trade. If it works, it works. If it gives me a sniper entry, that's fine. I place my SL at the most logical points for trading validation. And if the point for trading validation is too big, I just use, like previously before gold hits this maximum volatility, I would use 60 pips. But now I just use 100 pips or 150. I'm already on BE on this setup. From the first entry, I'm already on break even. I already have break even set. Since price broke above all these highs, I had my break. So let's see. So the session is about to end.